If you think a holding company is just for billion-dollar corporations, think again. Many small businesses can benefit from a holding company structure in a multitude of ways. Forming the holding company structure can give you great flexibility as you grow and enhance your business in so many different ways. So the question is a holding company right for you? Let's find out. Is a holding company right for you? It's not right for everybody, but by listening to this video, you're going to get solid advice on guidance and help you decide whether a holding company is a good choice for you, if it makes sense, and if it protects you and helps you fulfill your goals. A holding company should at its core not create any liability of its own. A holding company shouldn't get sued. It shouldn't have a contract dispute. Doesn't enter contracts with people. It shouldn't be sued for really anything, because its sole function is to hold other companies. It holds other companies and acts as a blocker and a simplifier, tax simplifier in many cases, for individuals who are seeking a greater level of asset protection, greater privacy, lower risk of charging orders affecting their subsidiary company LLCs, and less likelihood of veil piercing occurring. And a great example of how someone could benefit from a holding company is in the real estate space. Let's assume me and my friend Sue want to start purchasing real estate all over Texas. And we're going to buy single family homes and we're going to rent them to the public. Renting a single family home to the public means that we're engaging in business, we're doing business in Texas, and each of those LLCs would be a Texas LLC. And if Sue and I are the owners, then it would be a partnership. What would come along with that is we would need to do a partnership tax return for each of those LLCs. And let's say we have 10 properties. We'd have 10 partnership returns. That's a high burden. That's a lot of expense. An accountant may charge you $500 or more to prepare that partnership return. So now Sue and I have added on for 10 properties, $5,000 of accounting expense that is potentially could be avoided. We also have the problem of what is the relationship between Sue and I. We'd have to have a separate operating agreement for each property and lay out the rules of who does what, who's able to manage it, all of those things. We would also have the problem of a lack of privacy. So in Texas, we're going to have to list Sue and I in the Secretary of State records, and everyone's going to know that Sue and I have 10 properties, and we might get sued because people see us as being wealthy and we become a target. The solution in this case is a holding company, and a holding company would be formed in a state like Wyoming. There's a number of states you could form it in, but for reasons we talk about in another video, a holding company formed in Wyoming, we think is the best choice and checks all the boxes. So if Sue and I formed a holding company, which again is just a regular Wyoming LLC, there's nothing special about it. You don't need to check a box with the Secretary of State. I do recommend putting holding or holdings in the name just to make it clear that it is a holding company and avoid confusion. Your holding company would be, or Sue and my holding company would be, a partnership. We are the owners of that partnership. We would file a partnership return for that holding company, one partnership return. We would have an operating agreement. That operating agreement would say, here's what happens if Sue wants to leave, or I have a business dispute, or I get sued. It takes care of all sort of the eventualities. Everything that could potentially happen will be covered by that Wyoming agreement. That's our primary agreement for how Sue and I are going to interact with each other. Then we form subsidiaries in Texas. Each of those subsidiaries have only one owner. That owner is the holding company. And so for tax purposes, they're treated as disregarded entities. Disregarded entities for tax purposes does not undermine the asset protection at all. It is still going to be an LLC as long as we treat it with full respect, treat it as a separate company for legal purposes. But for tax purposes, all of that income flows onto the partnership return at the Wyoming level. We've eliminated 10 partnership returns and have one partnership return, taking our cost for an accountant down from $5,000 to hopefully $500 for one partnership return instead of 10. Simplification there. We've also protected ourselves if something happens at one of the Texas properties and there's a veil piercing where they pierce the veil and try to hold the owner of that Texas LLC liable, then they don't get to Sue and I. They get to our holding company. The holding company, its only assets are these other LLCs or very little in its bank account. It doesn't have anything really valuable. They would not be able to get into those other subsidiary LLCs, and they're sort of stuck at the Wyoming level, can't get to us, can't get to the assets, and they're really restricted to that single LLC that they sued. It also is beneficial because that charging order protection would apply. If Sue or I have a personal financial problem and we have a judgment creditor, if all we have is those 10 LLCs, the judgment creditor may be able to break in to those LLCs and, sorry, Sue, your new partner is Wells Fargo. It's not Jonathan Finiak because they foreclosed on my membership interest. But if it's a Wyoming holding company, they're going to be restricted, limited to the sole and exclusive remedy of the judgment creditor of a member of a Wyoming LLC as a charging order. They're stuck. They can't disrupt our business. They can't come in and become Sue's new partner or force us to do things that are not in the best interest of the partnership. So we get all of those benefits by forming this holding company. It adds a bit of administrative complexity, but we're saving on a lot of different areas. Let's talk about that administrative complexity. We need to hold each LLC accountable for its own expenses and income. We can't share expenses and income across all of the LLCs because then we've created the opportunity to do something called sister veil piercing. Someone could sue LLC 1. They look and say, wait a minute, you're sharing expenses and there's commingling of funds. You've only got one bank account and all of that is being mixed together. So really, these two companies are the same. They're alter egos of each other. That is a real possibility if you don't maintain each LLC separately. Separate bank account, number one. Everything goes into and out of that bank account related to that LLC. The rents go in this real estate scenario, rents go into that bank account, expenses are paid out of that bank account. Whatever's left, distribute up to the holding company for safekeeping. All that excess cash goes up to the holding company. You're going to keep a certain amount of cash in the subsidiary to cover its reasonable working capital needs. So if there's no tenants or you had some emergency, that expense could be covered with the working capital of that subsidiary. We don't want you to zero it out each month where it has no assets, because then in that case, there could be a claim that it's a mere shell. And there could be a veil piercing to get to Wyoming or really ignoring of that subsidiary LLC. As long as you're respecting each entity, the courts will respect the entity as well. Treat them as separate for legal purposes, for banking purposes, for financial purposes. But for tax purposes, we discussed, that's all going to flow up onto the partnership return. There is a bit more complexity. But I think if you have multiple LLCs with the same person, or you as an individual have multiple LLCs in multiple states doing multiple different things, you could benefit for a very small cost and a very small increase in your administrative burden. You could create some real asset protection, charging order protection, veil piercing protection, and privacy using that holding company. So holding company is not right for everybody. But if you value those things, a holding company could be right for you. Ultimately, many people can benefit from forming a holding company to hold their LLCs in other states, in the real estate space, or just those entrepreneurs who have a lot of things going on. Forming a Wyoming holding company can be a great choice for you. It can be complicated if you don't have the right partner, and we are the right partner. If you've decided after watching this video that a holding company structure is right for you, that you would like to receive all of those benefits, the next thing to worry about is naming it. Trust me, a lot of business owners have a very difficult time figuring out how to name their holding company. But don't worry, we've got some great tips here to help you make the best decision when it comes to naming your holding company. Watch the next video to learn more.